So good morning, everyone. Today's education session will be covering the new DB Plus pension adjustment offset. So joining me today is Margaret Saliba, who's a senior pension analyst with Employer Services. And also with us today are Heather Brady and Kyle Nimrichter from our policy team to assist with any questions that you may have. So the purpose of today's session is really to discuss the revised pension adjustment formula for DB Plus members. We will start reviewing we will start by reviewing the current pension adjustment framework, and then we'll move on and discuss the revised DB Plus pension adjustment formula. We will also talk about the timeline and the implementation date of January 1, 2023. And we will have some time today at the end to answer any questions that you may have. So now I'm going to pass it over to Margaret to begin today's session.
Thank you, Bill. What is pension adjustment? A pension adjustment is used to determine the deemed value of the pension earned by a member in a registered pension plan each year. The PA system was designed to level the playing field for tax shelter retirement funds between Canadians that have access to employer-sponsored pension plans and those that don't and who may have to save for retirement through a more traditional RSP account. This takes into account the full value of the pension a member has earned that year as opposed to just the contribution amount. Once the value is determined, the member's RSP room is then reduced by that amount for the subsequent tax year. A member's PA is reported by the employer on day T4 and used when filing their taxes. You may recall seeing your own pension adjustment on your T4. So how do we calculate a pension adjustment? There is a basic PA formula which many of you have seen before, and we have on this slide. This is the formula used for traditional defined benefit plans, including DB Prime, and will continue to be formula used for DB Prime going forward. To calculate a PA, you input the annual pension or benefit entitlement amount that a member earns, and the PA formula translates it into a number that works with the Canadian RSP system. Let's take a closer look at some of the elements of a standard defined benefit PA formula. Generally, PA formulas are pretty similar, but they can differ slightly based on the type of pension plan. The 9 is standard and is set out in the Income Tax Act, so that never changes. The benefit entitlement represents the pension the member earned in the tax year. The 600 PA offset is also standard and acts to reduce the total PA amount, meaning it would take up less RSP room. However, the PA offset amount is typically multiplied by a proration factor. For DB Prime members, the PA offset is prorated on the pensionable service, so the proration factor is equal to the member's pensionable service in DB Prime for that year. For example, if a member only works half of the year, the offset would be cut in half to $300. Let's look more closely at the current DB Plus PA framework. As mentioned, we will not be making any changes to DB Prime PA formula, and the remainder of the presentation will focus on DB Plus. The first part of DB Plus PA formula is the same, 9 times the benefit entitlement. From that, you subtract the PA offset. If the employer participates in both DB Plus and DB Prime, the DB Plus PA offset is $300. Some of you may remember that the DB Plus was originally designed for other than regular full-time employees, most of whom did not work full-time hours. For those members, a $300 offset applied with the assumption that for the most part, their service, if it was a factor, would be less than full-time. The simplicity of this framework meant some challenges for different aspects of plan administration. One challenge that was encountered had to do with the application of the PA framework to concurrent members. For purposes of the PA offset calculation, that is members who participate more than one CAT employer over a single year. Another challenge had to do with the PA treatment for interdesign scenarios, where members move from one plan design to another during the year. We need to ensure that members who change plan design in the same year have a pension adjustment offset that does not exceed $600. A third challenge of the current framework has to do with consisting the total PA between all employers for DB plus PA formula. This brings us to the revised DB plus PA formula. You will notice that the base calculation, 9 times the benefit entitlement minus $600, is exactly the same as the formula we have now. The only change is to introduce a new proration factor for the PA offset, just like we have for DB prime, except for DB plus. The proration factor will be calculated by dividing member plus employer contributions by the money purchase limit of that year. Once you enter the proration factor in the formula, it looks like this. As you can see, all we are doing is multiplying the 600 PA offset by the proration factor, which is member and employer contributions divided by the money purchase limit. Let's go to a quick example. Let's calculate the 2023 PA for a member with the following data. They have DB plus earnings of $50,000 and total contributions of $9,000, and therefore a benefit entitlement of $765. We assume the 2023 money purchase limit of $32,000. Let's take our DB plus PA formula. 9 times the benefit entitlement minus $600 multiplied by our proration factor of member plus employer contributions divided by the money purchase limit of that year. When we enter our amounts, we get 9 times $765 minus $600 times $9,000 divided by $32,000. Once you do the math, that is $6,885 minus $168.75. And since you have to report the PA rounded to the nearest dollar, the 2023 PA is $6,716. In addition, we have also developed a specific interdesign PA formula. It may look complicated, but when it comes down to it, it is really simple. This formula works by calculating two separate PAs. One for the DB Plus portion using a slightly altered version of the new DB Plus PA formula, and the other PA for DB Prime portion of that year using the current unchanged DB Prime PA formula. You may ask, why not simply calculate two PAs, one for DB Plus portion of the year and another for DB Prime portion, and add them together? The problem with that is that for members with high earnings, this may result in a total PA offset between the two portions of the calculations that may exceed $600. However, the ITA stipulates that the total PA offset that a member receives cannot be more than $600. As such, a sort of check is added to DB Plus portion of the formula to ensure that if the total DB Plus and DB Prime PA offsets exceed $600, the DB Plus PA offset will be reduced to render the total DB Plus and DB Prime PA offset equal to $600. Let's look at an example. This is Robin. Robin changes plan designs from DB Plus to DB Prime on September 1st, 2023. The member's DB Plus earnings are $50,000 and DB Prime earnings are $30,000. The DB Prime pensionable service is 0.33077. The DB Prime PA calculation follows the current formula, and the PA is $3,849. The DB Plus PA calculation will follow the new formula. The PA offset of $600 will be prorated by multiplying the lesser of 1 less the DB Prime pensionable service and member and employer DB Plus contributions divided by the money purchase limit for that year. So 1 less pensionable service of 0.33077 is 0.662923. The contributions of $9,000 divided by $32,000 is 0.28125. In this case, 0.28125 is lower and will be used to prorate the PA offset. The DB Plus PA will be $6,716. Let's look at an example of a member who changes plan design from DB Prime to DB Plus. The member DB Prime earnings are $87,083, and the pensionable service is 0.88846. The DB Plus earnings are $27,000. The DB Prime PA calculation follows the current formula, and the PA is $11,509. The DB Plus PA calculation will follow the new formula. The PA offset of $600 will be prorated by multiplying the lesser of 1 less DB Prime pensionable service and member and employer DB Plus contributions divided by the money purchase limit for that year. 1 less the pensionable service of 0.88846 is 0.11154. The contributions of $860 divided by $32,000 is 0.15188. In this case, 0.11154 is lower and will be used to prorate the PA offset. The DB Plus PA will be $3,651. Let's talk about the timeline to implement the changes. The go-live date for this change is January 1st, 2023. That is when the revised DB Plus and the inter-designed PA formulas will take effect. This means that any PAs for employment periods where DB Plus benefits are accrued from January 1st, 2023 onward will be calculating using the revised DB Plus PA formula. So what does this mean for employers? This means that for 2022 PA reporting happening in early 2023, employer will use the current DB Plus PA formula. However, for 2023 P8 reporting happening in early 2024, as well as for any terminations and retirements that happen over the course of 2023 and beyond, the new formula will be used. This also means that for any DB Plus pension purchases resulting in a PSPA from January 1st, 2003 onward, the PSPA will be calculating using the revised DB Plus PSPA formula.
Great, thanks, Evelyn. So that concludes our presentation for today. We did book an hour. We weren't sure how many questions we would get, so we wanted to allow for lots of time. So we are going to be ending a bit early today and giving you back some time. But again, as always, if you do have questions after today's session, after you've discussed it with your teams, you can always reach out to your employer pension analyst, and they can assist you with those questions that you have. So this is an employer education session, so we do ask that you provide your employer pension analyst. You do provide your employer pension analyst a list of who attended today's session so that we can track this for you on your behalf, and then we'll provide this information back to you at the end of the quarter, and again at the end of the year as part of the annual attestation process. So again, thanks for attending today's session, and have a great day.